I'm in GBP USD chart right now. I'm in a 5-minute time frame, because this video is for scalpers, guys. If you're not a scalper, this video might not be super helpful for you, but I'm going to show you the best way to enter your trade and to get out of your trade. So in this case, when you open the chart, you got to identify the trends first. First of all, in my opinion, trend lines don't work. They are not accurate enough to give you enough data to enter a trade or get out of the trade, because it's all about smart money concepts. That I have a video for that. If you still haven't watched my first video, I highly recommend you to go watch that, because I have a full breakdown of a smart money concepts, how to identify order blocks, where to take your position, and where to get out of it. So but no matter what you are trading, GBP, USD, Euro USD, whatever it is, you got to go to 1 hour time frame to identify the market's trend. Because when you're in a 5 minutes time frame, the market could be a little bit choppy and it's all over the place. For example, for this one, as you can see, it's kind of choppy. There's no clear trend. I can't clearly say this downtrend or uptrend, because as you can see, this box right here is consolidating inside this box. But if I change my time frame to 1 hour, first of all, I only look at 1 hour time frame and 5 minutes. So I don't go above that. I don't go for 4 hour daily, because it's not necessary. I'm a scalper. I just want to get into the position and get out quickly. So if you look at the 1 hour, you see that consolidation is happening right here as well. However, if I want to zoom in a little bit, I can see a more clear trend pattern, which in this case is a downtrend. So we have a huge bearish I wouldn't say momentum, because it's not a momentum, bearish, temporary bearish market structure right here, and it did a little bit of correction and it's going downwards again. But what's the point of doing this? First of all, we're gonna identify all the support and resistance levels. I'm not really a big fan of support and resistance, because I would say that retail traders do that, or I would say regular traders, and they always get stopped out. But you got to identify those levels just for more confirmation. So in my previous video, I showed you how to identify support and resistance levels. You got to zoom out a little bit and identify the highest points and the lowest points. So we have a low point here, high point here, and the highest points is exactly right here, and also we have a low point here. So this could be our support, I would say, just for more confirmation. As I said, it's not an indicator that you need to, like, for example, buy right here. I'm not saying that. I'm just going to tell you exactly where the market is going. So after we identified everything, and then we have our resistance right here. So we have our resistance level right here, we have our support level right here, and the market is kind of consolidating in the middle. So after you identify the trend, you know that the market is bearish. It did a little bit of correction after hitting this support level, and now it's going, we don't know, it's actually either going towards a downside, or it's gonna break into the support level, or it's gonna go to the resistance level and come back, or it breaks into the resistance level, do a retest, and then it goes up again. So we don't know. And then after that, you got to go to 5 minutes. After you identified everything, the trend, support and resistance, highest point, lowest points, you got to go to 5 minutes. So right here, you can clearly see then the market is consolidating. And after that, you got to look for gaps. Gaps are where banks and institutions place their orders. So whenever you see a big spike, you got to look at the previous candle after that happened. So I'm going to give you an example. For example, for let me just remove this path right here, not to distract you. It's in a 5-minute time frame. If you zoom in, you see that we have a big bullish engulfing pattern right here, and the first red candle before this spike is right here. So if I want to put my rectangle right here, you see that we clearly have an order block. Why is it an order block, and how can we know that whether it's valid or not? So I'm going to show you how. when this spike happens, you gotta wait for the candle after this. So you gotta wait for one more candle to make sure that the price is not coming back to fill this gap. So if the price fills this gap, it means that it's not invalid, but there's no gap anymore. So if you want to take a trade, it's low probability, it's not high probability anymore. But right now we had a huge spike here, and a candle after that just continued towards upside. So we have no correction right here. So I would say that we have a gap exactly right here. See this space here after this huge spike? So we have a gap here. So what does it mean? What should we do when we have a gap? We gotta wait for the market, for the price to come back and filling that gap, and then you can take your position. Although we identified that the market is kind of bearish, but if you have a strong momentum inside this box that shows us that the market is going upwards, then we can take that opportunity and go long. So I'm gonna actually put it on play to see where the market is going. See, it actually tapped into the zone, so we don't have any gap right here. Some people just wanna buy it right here and they put their stop loss here, but it's not a really good idea, because whenever you want to take a position after the price hits the order block, you have to put your stop loss below this box, not below the candle. It's gotta be below this box. So if I want to put my stop loss here and my TP, for example, right here 1-to-1, you see that I probably get a stopped out. I did get a stopped out, see? But if I would have put my stop loss right here, I would have been safe for now, especially after seeing this big bullish engulfing pattern. So this is another gap inside the first gap that we had. See right here, if I put my order block here, I'm going to change the color so you can see it better. I'm going to put a red one. We clearly can see a gap right here. So this is the gap right here. So I'm going to wait for one more candle. Boom, done. So let's say that you already took your position exactly right here and put your stop loss right here, and you wanted to take a 1-to-1 trade. Is it possible or not? 1-to-1. Exactly 1-to-1. And after seeing this bullish engulfing pattern, you could have taken it here as well, because it's actually showing us that this order block is still valid. So if I want to open another buy position right here and put my stop loss here, it would have been a 1-to-1 risk reward ratio trade. See? And then I move forward, it comes down. So it comes down. We already took our 1-to-1 trade, but if you want to leave a runner, you gotta be careful with that. Because you gotta make sure that there's no gap below this current market price. So I'm gonna actually let it run to show you where it's going exactly. See? It broke into our order block and it made it invalid. So that's why I'm saying this is the power of 1-to-1 risk to reward ratio trade, to just get out of the trade immediately and get your 10 pips a day. That's absolutely enough, guys. Trust me. Go back to see yourself. If you have any question, do it right now. Just drop your comment below this video and subscribe to my channel for more free videos. I don't have a course to sell you, so everything on this channel is going to be free. So see that after we took our trades right here, we are safe. So we don't have to worry about anything else, and these candles, these order blocks became invalid because it actually broke into it. So if you look at it, we see that we have another pattern here, which is break and retest. Now this was a resistance line, but after it broke into our resistance line, this has become our support. So for this case, we can do two things. There are two scenarios for this type of situation. First is this order block right here. Why is this an order block? Just drop your comment below this video. I want to see how you answer this question. I want to see whether you learned it or you need more practice. So the reason is that it could be an order block is that we have a huge gap between our bullish candle and the next candle that happened after that. So it means that our order block is here, we had a huge spike, the next candle left a gap exactly in between. So we can expect the price to come back and fill in that gap. or we gotta wait for a break and retest opportunity. So it means that the market could probably come down here and test it somewhere and go up, or it could actually come down, filling this order block, and then go up. So there are two situations here. There's two scenarios right here. It's very, very important. You should not predict the market. You should trade what you see, not what you expect or what you predict. So I'm gonna let it run to see where it's going. Oh, okay, so actually broke our swing high. It actually broke our swing high. It has stopped out all the sellers. See, that's why even this one is invalid. There were so many stop losses right here, they all got stopped out. And then we gotta wait for the price to actually come back to the origin, if it comes back. But if it doesn't, so it didn't come back actually. See, we gotta wait for this one, but it never happened. So we have a huge gap right now here. We have a huge gap that needs to be filled later. So, but when you see that the market, that the price is not coming back to your desired level, you shouldn't give up, because it's probably making another structure. So exactly the same thing as this one. We have a break and retest. If I go back right here, you see that we have a resistance level exactly from here to here. So after the market, after the price broke into this resistance line, this block has become our support line or support block. So we gotta wait for a retest right here. So this retest is kind of not really high probability, because as you can see, we don't have a shadow below this order block. It's actually a full candle, so it means that it broke into this candle. So right now it probably go back, actually correct this resistance line and then come down, or it can just go up again. So if I press play, you see that the market is still going up, and we could take our one-on-one position right here, but it's kind of riskier. This is a low probability setup. Supply and demand is high probability, but break and retest is more low probability, because right now for this one I wouldn't really recommend doing it. I just wanted to show you some examples that how the market price works. So this has become invalid, but as you can see, we have some consolidation here. So it means that market is trying to come back to filling this gap. It's very, very important. It probably comes back, it probably doesn't, but it will eventually come back to actually fill in everything. So here we have so much gap right here, and we have a gap right here. So we need to kind of extend this order block and wait for the market to actually come down and fill those gaps. And one interesting thing that I would like to share with you, that if you go to 1 hour time frame again, you see that we have a little bit of gap right here that needs to be filled in, exactly right here. See, the market just spiked through this actually spiked up and then tried to come back to fill in this gap, but it wasn't successful. See, you gotta zoom in to see that we have a little bit of gap right here when I draw this order block. So the price has to come back and fill in this gap. It's very, very important. And when you go to 5 minutes, you can clearly see that the market is trying to come down. So you gotta wait for it, and then as soon as it hits your order block, you can either put your buy stop right here, or you can wait for more confirmation and trade it manually. So if I put my buy stop, my buy limit here, and my TP right here, it's a 1-to-1 risk reward ratio, and I wait for more confirmation to see if it actually hits my TP or my stop loss. So see, it actually filled in the gap and trying to go up. So I'm gonna go here and then see breakout, correction, and probably continuation. So it tried to come back again, and now we have a really, really clear bullish engulfing pattern here, bullish engulfing candle. So if I take another buy position here and put my stop loss below the lowest point and take it right here, it's a 1-to-1 risk reward ratio trade again. And if I press play, you see, if I press play, it actually went through and took my TP right here. It's super simple. It's all about the gaps. You got to pay attention to the gaps. It's super important, guys. If you identify order blocks and the trend, then you will notice that the market has really huge potential to come back and fill in those gaps, because this in this section, in this area, the market couldn't fill in the gap, so it left a little bit of gap right here, and it wasn't successful to actually tap into this zone. That's why it came back. It gave us a momentum, and then we could take our buy position right here. This is the beauty of order blocks, guys. We didn't use support and resistance, we didn't use trend lines, none of this stuff. But again, please, if you have any question, drop your comment here. I'll be more than happy to get back to you as soon as possible. So that's it for this video, guys. I hope you liked it. We are gonna have so many more videos like this. I can guarantee you that if you go and backtest this strategy, you will be successful by 80%. So this method has over 80% accuracy. I'm not even kidding. And I have a live trade. Go check out my previous video that actually I was trading live using this method, and I hope that it can be profitable as well. And again, if you still haven't subscribed to my channel, do it right now, guys. And if you want to trade hands-free and you don't want to manually trade yourself, or you don't have enough time, you don't have enough capital, or actually you're not consistently profit, I highly recommend you to go check out the smarteaincubator.com and grab the gold EA incubator, because it actually trades for you automatically, and then you can actually expect profits somewhere between 8% to 15% per month on a regular basis. So thank you so much. See you later.